What's up everybody and welcome to my boat. Just kidding, welcome back to the channel or welcome to the channel if it's your first time here. My name is Troy and here on my channel I don't do all the stuff you guys see all over YouTube where I tell you guys the world's gonna end, the stock market's gonna crash, or you need to watch this video ASAP. But instead, every Friday at 8 a.m. Central Standard Time, I share with you guys 5 stocks that I think you guys might like that all have ex-dividend dates of this coming week. Now what makes these lists and these stocks so unique is that all of these stocks have outperformed the S&P 500 over a long period of time. They all have super low payout ratios and super high dividend growth rates. So if any of that sounds interesting, make sure you guys stay tuned for the rest of the video. But now let's go ahead and jump right in with number 5, Evercore, stock ticker EVR. Including today's video, I've now mentioned EVR 3 times right here on the channel. And if you go all the way back to the very first time I told you guys about it, on May 19th of 2023, EVR has crushed the S&P 500. And I want to show you the numbers behind why I like this stock long-term even more. EVR is a quarterly payer in the financial sector, paying $3.20 per share per year with a forward dividend yield of 1.07%. EVR has been paying and growing this dividend over the last 18 years. They have a 3-year dividend growth rate of 6.54%, a 5-year dividend growth rate of 7.64%, and a payout ratio of 22.78%. Now, at the time of recording, Evercore was actually trading 7.62% off of their 52-week high. They have an ex-dividend date of November 29th with a payout date of December 13th. And looking at this chart, you're going to be able to see the growth of a $10,000 investment into this stock versus the S&P 500 over a long time frame. In most cases, it'll be 10 years, a little bit of foreshadowing there. In any case, EVR over the past 10 years, while only reinvesting your dividends, would have turned that $10,000 investment into $75,210.72, which outperforms the S&P 500 by $40,982.18. Next up, and coming in at number 4, is CRA International, stock ticker CRAI. Including today's video, I've also mentioned this stock 3 times right here on the channel, and if you go back to the very first time I spoke about this one, on November 24th of 2023, CRAI has also crushed the S&P 500 since then, so let's go ahead and take a look at the numbers behind this one. CRAI is a quarterly payer in the industrial sector, paying $1.96 per share per year with a forward dividend yield of 1.05%. CRAI has been paying and growing this dividend over the last 8 years. They have a 3-year dividend growth rate of 26.4%, a 5-year dividend growth rate of 21.3%, and a payout ratio of just 23.37%. Now, at the time of recording, CRA International was trading 10.62% off of their 52-week high. They have an ex-dividend date of November 26th with a payout date of December 13th. And same chart here, CRAI would have turned that $10,000 investment while only reinvesting dividends since then into $68,318.46, which outperforms the S&P 500 by $34,089.92. Next up, coming in at number 3 on this week's list is Tetra Tech, stock ticker TTEK. Now, I'm very excited to tell you guys about this stock because today is the very first time I'm speaking to you guys about this stock right here on the channel. So let's go ahead and see what numbers are behind this beauty. TTEK is a quarterly payer in the industrial sector, paying 23 cents per share per year with a forward dividend yield of just 0.56%. TTEK has been paying and growing this dividend for the last 10 years. They have a 3-year dividend growth rate of 14.13%, a 5-year dividend growth rate of 15.3%, and a payout ratio of 15.69%.
Nice. Nice.
At the time of recording, Tetra Tech was trading 19.39% off of their 52-week high, so there might be an opportunity there. They have an ex-dividend date of November 27th with a payout date of December 13th. And taking a look at this chart, a $10,000 investment into TTEK 10 years ago while only reinvesting those dividends would have brought back $83,058.16, which outperformed the S&P 500 by $48,829.62. And with that being said, we've already covered 3 stocks in today's video, which means we're a little bit over halfway done. If you guys didn't already, please take 1 second to leave a like on the video as it helps me continue to grow my channel and tells YouTube that people like seeing this kind of stuff. Also, I want to hear from you guys. Let me know what you guys think of this week's list, the good or the bad, in the comments down below. But now let's get to number 2. Coming in at number 2 on this week's list is Griffin, stock ticker GFF, no relation to Gryffindor. Including today's video, I've now mentioned this stock 3 times right here on the channel, and if you go back to the very first time I spoke about this one on February 23rd of this year, GFF has underperformed the S&P 500 since then, but I love this stock long term, and I want to show you the numbers behind why. GFF is a quarterly payer in the industrial sector, paying 72 cents per share per year with a forward dividend yield of 0.98%. GFF has been paying and growing their dividend over the last 13 years. They have a 3-year dividend growth rate of 23.32%, a 5-year dividend growth rate of 15.66%, and a payout ratio of just 11.7%. Now, at the time of recording, Griffin was trading 8.71% off of their 52-week high. They have an ex-dividend date of November 25th with a payout date of December 18th. And looking at this chart, that $10,000 investment while only reinvesting your dividends since then would have been turned into $80,931.58, which outperforms the S&P 500 by $46,703.04. Next up, coming in at number 1 is a stock I'm super excited to share with you guys, and that is Kinsale Capital Group, stock ticker KNSL. Including today's video, I've now mentioned this stock 4 times right here in the channel, and if you go all the way back to the very first time I spoke about it, which was February 24th of 2023, KNSL has actually underperformed the S&P 500, which you guys will see in a second is very shocking. KNSL is a quarterly payer in the financial sector, paying 60 cents per share per year with a forward dividend yield of just 0.13%. KNSL has been paying and growing their dividend over the last 8 years. They have a 3-year dividend growth rate of 12%, a 5-year dividend growth rate of 13.74%, and a payout ratio that makes it all sustainable at just 3.35%. Now, at the time of recording, KNSL was actually trading 15.17% off of their 52-week high. So this might be something like a flash sale, if you will. They have an ex-dividend date of November 29th with a payout date of December 13th. And here, you guys will be able to see why I was so excited. A $10,000 investment into this one just 8.3 years ago, while only reinvesting those little itty bitty dividends since then, would have turned into $259,959.73, which outperforms the S&P 500 by $228,874.03. If you guys made it to this part of the video, first I want to say thank you guys so much for watching, but if you guys happen to be watching it after November 25th of 2024, you need to make sure you're subscribed, because all the stocks I mentioned in today's video have ex-dividend dates of that week, which means you might have just missed out on that ex-dividend date, and since they're all quarterly payers, you now need to wait 3 long months before you get paid from any of these companies, and we all know
Ain't nobody got time for that.
With that being said, if you're not worried about the ex-dividend dates and you just want quality companies and you didn't see last week's video, make sure you check that out right here. But until next time, see ya.